Listen to me. If you are retired, or if you are standing right on the doorstep of retirement, I need you to pause whatever you are doing and pay close attention. We need to have a serious, heart-to-heart talk about your money, your credit, and specifically that Capital One card sitting in your wallet. Lately, so many of you have been asking me a very specific question. Susie, what is the maximum payment on Capital One? Now, when you ask that, you might mean one of two things. You might be asking, what is the absolute maximum credit limit Capital One will give me to spend? Or, more likely, especially if you're trying to clean up your financial house before you stop working, you are asking, what is the maximum amount of money I can physically pay toward my Capital One card at one time to wipe out my debt? Today, we are going to answer both. Because in retirement, debt is a thief. It steals your freedom, it steals your peace of mind, and it absolutely forces you into a state of fear. And you know how I feel about that. Fear is the main obstacle to wealth. Let's start with the first angle, making a payment to Capital One to get rid of your balance. If you have a chunk of money, maybe from a retirement payout, a savings account, or because you are downsizing and you want to make a massive lump sum payment to completely crush your credit card debt, listen to me. Capital One does not have a hard, universal dollar limit on how much you can pay them back. If you owe $10,000, $20,000, or even $50,000, they will gladly take your money to pay off that balance. However, there is a very strict rule you must understand. You cannot make a payment that is significantly higher than your actual account balance. Why would you want to? Sometimes people think, I'll pay extra so I have a positive credit balance for future spending. Capital One generally limits your online payment to your current balance, or in some cases, just a tiny fraction over it, typically up to 110% of what you owe. They do this to prevent credit balances from turning into accidental checking accounts or triggering fraud alerts. But here is where the trap lies for retirees, and it is a massive safety hazard for your cash flow. If you suddenly make a very large payment, say $5,000 or $10,000 from a bank account you don't normally use, or if you recently linked a brand new bank account to your Capital One profile, Capital One is going to wave a giant red flag. They're going to put a payment hold on your account. What does a payment hold mean? It means they will take the money out of your checking account immediately, but they will not update your available credit line for up to 10 business days. They do this to make sure the payment actually clears and doesn't bounce. If you are on a fixed income and you just emptied a chunk of your checking account expecting that credit line to be immediately available for an emergency, you're going to find yourself in a very tight spot with your money locked up in limbo. So, if you're planning to make a large payment, use the exact same bank account you have successfully used for the last 6 months. Don't switch accounts at the last minute, and don't try to pay more than what you actually owe. Now, let's look at the other side of this coin. What if you are asking about the maximum payment limit from the perspective of your credit limit? What is the maximum credit limit Capital One will grant you? For premier cards like the Capital One Venture X, credit limits can easily soar to $20,000, $50,000, or even more for those with stellar credit and high incomes. Some cards don't even have a preset spending limit, meaning your purchasing power adjusts dynamically. But hear me on this. Just because Capital One will give you a $30,000 limit does not mean you should be using it. When you enter retirement, your income changes. You are no longer bringing in an active salary. You are living on a fixed distribution from your 401k, your IRA, or your Social Security. If you have a high credit limit and you start carrying a balance, the interest rate, the APR, will eat you alive. Credit card interest rates are hovering at historic highs. If you carry a $10,000 balance at a 25% interest rate, you are throwing away $2,500 a year in interest alone. That is money that should be buying your groceries, paying your utilities, or funding your medical care. If you already have a high limit and a high balance, your immediate goal must be to pay it down. And please do not just make the minimum payment. The minimum payment is designed by the credit card companies to keep you in debt for decades. It is a financial trap designed to extract as much interest from you as legally possible. If you are about to retire, I want you to make a promise to yourself today. No more carrying balances. You must use your credit card solely as a convenience tool. You charge only what you can afford to pay off in full every single month. If you cannot afford to pay for it in cash today, you do not buy it. It is that simple. Let's talk about your actionable takeaway to protect your credit and your retirement security right now. First, look at your credit utilization ratio. This is the percentage of your limit that you are actually using. If you have a Capital One card with a $10,000 limit and your balance is $3,000, you are using 30% of your credit limit. To keep your credit score in the absolute highest bracket, which you need to protect your insurance rates and future refinancing options, you should keep that utilization under 30% and ideally under 10%. Second, if you need to pay off a large debt on your Capital One card, do not do it in one frantic, massive payment if it is from a new account. Break it up or call their customer service department first to let them know a large, legitimate payment is coming from your bank. This prevents the algorithm from freezing your account or holding your funds. Third, if you are struggling with a high balance, call Capital One and ask about their hardship programs. They are actually one of the more reasonable credit card companies when it comes to working out a payment plan if you explain that you are transitioning to a fixed retirement income. My friends, retirement should be the most peaceful, joyful, and secure chapters of your life. But you cannot have financial freedom if you are constantly worrying about credit card limits, maximum payments, and interest charges. Take control of your Capital One account today. Pay off those balances, protect your credit score, and remember the golden rule: people first, then money, then things.